Oh, yes, right on cue. We have numbers breaking September's CPI along with the pick getting loud. Up 1/10 headline, up 1/10 core, half of what we were expecting. No revisions in the rearview mirror. Let's get into the juicy stuff. Year over year, headline CPI up 2.3. Not only is that less than expected, it's 4/10. Yes, 4/10 less than our last look. And do keep in mind, our last look was 2.7. Before that, in July, it was 2.9. So this number really does backtrack. This is the lowest number since February when it was 2.2. Now, if we look at year-over-year core, as expected, virtually 2.2, exactly as in the rearview mirror. Now, let's look at real average earnings year over year. They were up 1.1. If you look at average hourly earnings, they were up 1.1. I'm sorry. So we want to pay attention to that as well. Finally, jobless claims, 214,000. So that's a jump of 7,000. Last week was unrevised. You know, Treasury yields are supposed to go down when the stock market gets squeamish, and they did. 314-ish, 315. We are moving a bit higher on 10-year note yields. One thing, Becky, Andrew, Joe, the gang, keep an eye on a couple of things. Obviously, volatility. Keep an eye on FX swaps. Very interesting developments there. And keep an eye on some of those short rates around the globe, even in China, whether it's HIBOR, SHIBOR. All these things have been moving to lofty levels the last couple of sessions. Lots of moving parts. Andrew, Joe, Becky, back to you.
Hey, real quickly, Rick, thank you very much. Let's take a look
Yes.
again at the futures, folks, because as these numbers came out, and we'll go out on a limb here and say that it was the CPI data that was not as strong as had been anticipated. Consumer inflation up by only 0.1% on both the headline and the core number. Expectations had been for growth of 0.2%. What we saw with the Dow futures very quickly, we had been down almost 200 points just when the numbers hit. We dropped down for a moment into just double digits, down from triple digits. You now see we're down by about 149 points. S&P futures still down by just under 10 points, and the NASDAQ down by about 24.
Okay. We should tell you Steve Liesman is on set, crunching similar numbers, making faces at his computer. What are you...
Grunting and otherwise commenting.
What is happening?
You know, I think the headline number is flattered by a decline in energy prices, which fell by 0.5%. I'm not sure that's going to be the case when we get to this time next month. And looking at the rest of it, it's all sort of modest. The core comes in at 2.2%, which I believe is unchanged from the prior month. It's pretty much on target where the Fed is going to be. You could argue this in the, I guess the new debate is the Fed crazy or not is the new debate. You could argue this both ways. You could say, hey, we don't have an accelerating inflation, although there is perhaps some in the pipeline if you look at what's happening to unemployment being down so low, and all of this anecdotal evidence we get from employers about saying that, hey, wages have to go up and are going up in order for us to attract workers. So
it hasn't happened, though, and unemployment's been low for such a long time. So if, you know, we talked about where did the Phillips curve go?
Yeah.
And now I don't think anyone found what happened to the Phillips curve. So we've been waiting for this inflation to kick in. I think there's still room that we're not going to be chasing it to stay ahead of policy. But that's the debate, and it's going to be an ongoing debate.
Well, I mean, let's just say, like, we were, call it, back in August of 2017, we were at 1.7, and now we're at 2.2. So that's a half a point. You know, there is some inflation out there. Look, it's a target. The Fed can declare victory on that. And then you have the argument, well, should the Fed wait until we accelerate before hiking rates or do so preemptively? And that's the debate.
Does anecdotal evidence matter when you start hearing from companies like PPG and others? Right. Is that the type of thing?
The first thing you learn,
pipeline, or do they wait? The
first thing John Riding told me 25 years ago when we met, and he was at this firm that we won't mention, but he was a genius over there, was anecdote is not evidence. That's the sort of thing that a smart investor looks through, and you listen to a single report, and then you say, okay, what's happened to overall macro earnings? And the story is, I don't think, and Grasso, you know better than me, that really not changed much. The macro earnings, the broad outlook is pretty strong.